it depends. Depends if I didn't go gym this morning. I'm gonna go a bit later. So if I don't go gym this in the morning, I'm already like in the charts. And then when we jump on, it's like I just continue. So that's why I kind of overlook it. But thank you, much appreciated.
I did that, man.
All right, so we should be live now. Yeah, we should be live. All right, so GU is what we're looking for. Look, still haven't got that closure. It's mucking about. We got a closure on a 1 minute time frame, but not. I was looking on it for a nice 5 minute closure. This is a bit of a closure on a 1 minute time frame. I want to see a nicer closure. I'm looking at time here. Look, within the next 2 minutes, it's 8:33. For the next 2 minutes, I'd like to see this being up here. All right, but it's kind of mucking around a little bit. Look at EJ, as I was saying. Have a look at the EJ structure. And you guys want, very quickly, I want your eyes to be able to see walk one. Yeah, I don't want people to be like, I don't get it. If you don't get it, if you take less than, I don't know, a few minutes to look at a market and kind of get, I'm not trying to say where your entry is and exactly where your stop loss is, but kind of get immediately what you want to do. Yeah, then tell me and we'll go over it and break it down again. We'll go over some stuff and we'll break it down again and try and get that speed up because it's needed. Like if I show you a chart that looks like this, ultimately you should be like, okay, it's bullish market. I'm interested in getting in the buy. I'm interested in getting in the buy in a place where it's discounted. Okay, where prices are cheap. Prices are cheap always at the bottom lines. Prices are expensive at the top lines. This is some basic stuff, some basic rules. Okay, because look at these rules. These rules are that if you was back in time here historically and you said, okay, those are the rules Jay's playing by. These are rules that we're playing by. Is that we want to buy things that are discounted. We don't know which is the overall direction of the market. And therefore, discounted is us understanding the trend, being able to draw our trend lines the way Jay showed us how to draw the trend lines. But ultimately, I want to buy when things are on the discount line. Now, if you did that, bought on the discount line, 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 you'd be nice.
Motion detected at your front door.
You'd be nice. So you don't have to take my words for it. You don't have to be like, oh yeah, like you would be nice if you did those things. If you just did that alone. Yeah, we can do that. We can do it in multiple places. Understanding. Look. For example, if we was here, if I rewound the chart, we can do this with any chart. Yeah, if we was like down here, and we turn around and said, okay, we're gonna draw some lines in here. We're gonna draw some lines in. Watch, and I'm not gonna do like I'm gonna take these 2 data points here and here, and draw some lines in like so. Yeah, saying that this market was pushing up in this little yellow impulse. Yeah. Well, when the market came back down and you bought at the discount line, you'd be nice. Boom. Now, when we're getting up here into the premium line, the top edge, well, this is where people are interested in selling. I wouldn't be buying up here. Good job I didn't because look, fell to hell. But then the market thought about it for a little bit, kept going in this direction. Okay, so as soon as it does that, you've got new information. New information means you can change this line. You've got a new line now. You can't change the line without the information because you don't have it. But when you've got the information, now you can go, okay, there's some new structure going on in here. Yeah, and ultimately down here, there was a place where you'd be thinking to yourself, look, if for example, see when this line came down here, boom, made that, and then broke structure over here, boom, you could have said, okay, there's some new structure. You could have touched that data point here. So now you're touching, not this one, but you're touching this data point and where we started from. As soon as you got back down into this line area, you should be thinking to yourself that this is a discounted area. Unless you see this structure breaking outside of that yellow line, retracing and then closing back down here, you're thinking buys. If it does that, you're thinking, okay, something else is happening, potential sales. But look, it comes down here, it doesn't do that. It sits there. You should be thinking, your finger should be on the trigger about buying that market. That's what you should be thinking. And if you was, and you got a better confirmation on a smaller time frame, indicated correct to the continued over structure, boom, you'd have bought, you'd have been in the money. When this market starts coming up here to premium levels, you're not thinking about buying. If you're wicked and bad, you're thinking about selling because when I say wicked and bad, that means you're selling against the trend. which is a slightly more difficult skill to execute because the market is not flowing in your favor. So you have to know when to get out of that trade. But you'd be thinking about selling. Have a look. You'd be coming up to those premium areas and you're thinking, right, maybe he sells on the card. And look at the market selling off. Like, this thing is not rocket surgery, like rocket science. I was about to say rocket surgery. It's not rocket science, yeah. It's not. But what is understanding where we are, because we also know that over here we're in the top. We're in the top of our bigger Russian doll, meaning that we're in a premium of this bigger white range. So even though we want to be buying the markets, we may see this market trickling back down to discounted level. Let's have a look. Yeah, even though the market's moving in waves, we may see it trickling down to a discounted level. Okay, we pushed all the way down here, and have a look here. Not only the fact that we just pushed down into here, this level is significant. This level is significant. It's significant because it represents a previous mountaintop structure where there was huge sellers here. Market was coming up here to space, and boom, this is a swing high. There was huge sellers here that pushed the market down. So even though the market broke through here with strength and speed, when it came back down to that level, it had memories, boy, of the battle. It was like, boy, grimy down here once upon a time. Yeah? And it leaves. This is a significant level. Just like here is a significant level. Look, have a look. If I look to the right, look how price sat on that level. Can you see? It happens time and time again. Look over here. The market couldn't break this level, and it broke it with some strength and some speed. Look at that level when the market came back down there. This is about structure, yeah? This is about market structure. Let's have a look. Let me get rid of some of the scribbles. All right, I'm gonna hit play. Let's watch what the market does. So the market's in this kind of premium-ish area, trading with it. Remember, this is the range. This is the walls. These two white lines here are the walls that have been set. You can kind of see it's kind of got a bit hesitant about whether it wants to come and break up here. Yeah, it's actually going sideways a little bit, making lower lows now. It's trying to get back down to this discounted area. Look, the holy grail is this little discounted white line over here. It's like, yeah, it's mucking around in the middle. Who knows what's going on? Okay, so maybe this market didn't quite get to this white line over here, and it's trying to actually get to it and touch it. Now, look, watch. Like I said, let me pause it. Like I said, you can't do anything until you get the information. So when you start seeing these highs being broken, making higher highs, you can now do this. Watch. Why are you drawing your lines like that? Because you want to be able to touch the last low before the highest point. All right, so this now, you can get rid of this because now you've got new information. Remember, the world's constantly changing. This is new information. This market's been pushing up within this range, in this level. It's been pushing up in this kind of area here. Why are you able to say that? It's because you're getting higher highs here. So you have to take into consideration this lowest point before these higher highs. Remember, I'm looking at this really far out. Like, the reality is that within here, there's many different ranges happening, the impulses and retracements, etc. Okay, but ultimately, what we're looking for structure. So this market's come up here, and you have to understand as well. Also, is whenever something's happening, you pause this. Whenever something's happening, you are looking. Look at the bigger picture. The bigger picture is that Jay's drawn. Let me change this color, make it something we can see. There's a yellow box that this market's been trading. Yeah, this is the yellow box of Egypt. This market's been trading in. Yeah. So yeah, that's just, that's how we have to look at structure. Let me just go back to GU, guys. All right, see what's happening with GU. Right, still waiting for that little closure over there. Still mucking about. We look like we may get it in a minute. All right, still looking for a closure above this little wick high. Looks like we may get it. Okay. Let me put a little alert in here. Now there's two entries. There's an aggressive one, which is below this low, and this candle closes. You know what about the aggressive entries? The aggressive entries are high risk and high reward. Okay. And remember, this isn't the real, this is a short-term play. So for the bigger entries are obviously going to be below that 50% mark for now, around about here, 50% of this initial consolidation. All right. But the aggressive entry is going to be here. Now I might take this aggressive entry on the basis that we come and we can close up this first green area and maybe get to a 1-to-1. We get to a 1-to-1, I'm going to be protective of my position. But maybe the way this market's been moving stubborn, yeah, and we know that there is some news happening this week, some significant events. It may decide it wants to run past it, close those 4-hour imbalances. All right. But ultimately, I'd like to be in this market for the sell. Yeah, I would. So I'm going to put my alert in here. Look, still ramping, still just mucking about. Yeah, wants to close, doesn't want to close, wants to close, maybe he's going to close, not sure. All right. Do this. And I'm just going to be patient and wait and see what happens. I'll also put an alert down here if it decides it wants to do something else. Maybe it doesn't want to go up there now and it wants to just get bearish right now. I do not know. Let's have a quick glimpse at the fundamental news. What's happening? If there's any. Oh yeah, look. We nearly forgot. Today is active. Active. Yeah. CPI. Inflation, core inflation, everything, speeches, FOMC minutes, mad thing. It's crazy. It's a lot of stuff happening today. All right. So that's going to have a real effect on the volatility of the markets. All right. So you have to make sure you protect your position. Have a look at this euro. There's some in 15 minutes time. There's euro news coming out. Tell you what, maybe we'll go and look at the DAX. Listen, we're going to go look at the DAX, see what's happening over there. All right. So we'll leave this for now. We've got our alerts in here. I'm going to go over here and I'm going to go look at the DAX or some, the JER 30 or even the JER 40, which I don't know which one it is. I think in Rwanda, it might be DE 40. DE 30. Yeah, there you go. It's DE 30. This is what it is. They're all the same. They're all the same pairs. They just, and for some reason, they got some different names. Right. So let's have a look. We're going to go here and look at this market. All right. So I'm going to delete everything off my charts real quick. I don't want anything I've made earlier. Zoom all the way out, understand what's happening with this market. All right. This is the DAX. All right. An indice market. And we can see that these indices here, like the US 30, this is the JER 30. All right. Or the JER 40 now, because there was actually a JER 40. But it's like some people just don't care and just kept it as a JER 30. Now we've seen some angles like this. All right. You see the market was essentially in here, couldn't break these highs, broke these highs, made a higher low, came up here, couldn't break these highs, just made this higher high over here on a much bigger picture. We should put some lines in like so. Okay. Maybe the market's trading within this range like so. Okay. We're gonna go down to my weekly, see what's going on. All right. On the weekly time frame, we can see how, yes, we broke these highs over here, took the liquidity, nam over here. Then we continue pushing up quite aggressively. Have a look. This kind of angle, and make this a different color. Okay. If we wanted to, we could put a top end on it like this, on a bigger picture and a smaller picture like this. Okay. If I drop down to my daily time frame, have a look what's happening on a daily, so we can see that range. See that energy and markets trading within that range. Okay. Like so. We can draw those lines better than that. Okay. Because we can see, if I can just put the general guide like that, we can see the market pushed up like in here. Why am I drawing these lines like this? Because I want to touch the last low before the highest point. Straight onto my 4-hour, give me more information. That's a bit better. Okay. So we can see here that the market, these lines are drawn rubbish. Let me draw them better. We can see here that the market was pushed up here and then broke structure, indicated, corrected, continued, indicated, corrected, continued, indicated, corrected. And we're wondering now, are we going to continue down here into these levels? Have a look. I'm going to draw a line like so. Draw a line like so. Are we going to was this little movement, did this close below the structure? Let's have a look if we close below the structure on the 4-hour time frame. Well, not really. We wicked below this structure here. So maybe this is done going down now. Maybe we're going to start pushing back up here because we're at the bottom of this range in a discounted area. Maybe on a bigger picture. All right. Drop down to my 1-hour time frame. Let's have a look. On a 1-hour time frame, this market was coming down here in this angle like so. It's coming down here. All right. And we've seen the market make an indication below this level here, closed below this structure here, closed, and then corrected back up into here. And the market is currently trading within this high and slow. All right, that's where we are. We're trading there. Okay. And the question that we're asking ourselves is, are we now going to keep pushing up through here, or are we going to keep coming down here because this is going to be a continuation, because this was that little indication below some structure. Okay. I'm just looking all the way over here. Maybe a little indication below some structure. The market went sideways, started pushing up here. But the issue is price has broken outside of the market now. This is outside of this white angle here. So it's a bit like, what are you doing? Let's drop our time frame down, have a look on the 15 minutes. On the 15-minute time frame, as you can see, like I said, price was in here doing a little hokey cokey. Price indicated, corrected, continued. Can you see it? So clear, so simple. Yeah, price indicated, corrected, continued, really showing like it wanted to break outside of this trend, which it did. Broke outside of it. Yeah, and then it was early hours of the morning Asian session where the market just said, you know what, tired. Yeah, she chilled out, went to sleep. And now we've got a bit of an indication on a smaller time frame. Let me see let me draw to a 5-minute time frame and have a look. Bit of an indication, bit of a correction, bit of a continuation, but the market is kind of just fluffing around, maybe because there's this news happening in the next 10 minutes. Okay. However, the energy for me seems like this market may want to push up into these levels. Have a look. There's some liquidity that's going to be sitting above these highs. Maybe the market might push up into these levels, and then from there decide it wants to continue with what it's been doing, trending, ping-ponging in that range. Yeah, maybe. Or maybe the market might decide, you know what, it's had enough of that, wants to break outside of that range. Let's zoom out. That's our GU. Let's have a quick look at our GU. Potentially pushing up there. I want to get a really aggressive entry. I'm not going to lie to you. This is below the swing low. And boom, boom, boom. Oops. I'm in early. Do not take that trade. That was my mistake. All right. I'm in early. It was a mistake. All right. Lack of concentration. That was a mistake. All right. I hit the button a little bit early there. Let's hopefully it pays off. Yep, it pays off. We've got 1 minute here. Closure. 8 seconds. 6 seconds. Or at least it's a 1 minute close. All right. Isn't quite a 5-minute close. There you go. So 1 minute close. Cool. I'm happy. That mistake, I'm all right. Because there's at least a 1 minute closure there. And now I want to see it go. Yeah. Now I'd like to see it go. I am concerned because, like I said, this isn't the direction I really want to be in for this market. I just think to myself that we may first close this imbalance, which is that green box. No, sorry, it's not that green box, which is, yes, it is that green box. We may first close that imbalance, which is that green box, which, we're talking about a 1-to-1, okay? But if this market gets troublesome, especially if there's all this news today, etc., it's got a habit of just doing the unthinkable, and it might just push straight past this level and start trying to close up some of these imbalances. These imbalances are coming from this high over here. Okay. Now let's measure out that impulse. Okay. So from the top here, from the top here, oopsie daisy, from the top here down to here, we're kind of gone past the 50% level, which is here, sitting at pushed up to a 618 over here. Is this market does it want to push up all the way into this golden zone up here? It's possible. It's very, very possible that this market wants to push up here just to be troublesome and then start dumping off from here. That's what I'd like to see it do. Yeah, in an ideal scenario, I'd like to see it push up all the way up in here, closing all these imbalances. And then maybe the news is going to come out and then this market decides to tank from over here. That'd be great. That'd be in line with the overall structure, etc. But that is just wishful thinking. That isn't based upon confluence. That isn't based upon anything. That's based upon, I would like hopium. All right. Not even hopium, just like it would just make sense. All right. If it doesn't, and right now it turns around, that would also make sense. Sticking within this range as it comes down. Okay. We can see that square that we drew. Now, the problem with that square is that the market can do anything because we're in the middle of this bigger range-ish. Yeah, we're in the middle of this bigger 330 pip range. So this market could decide now wants to start tumbling down here, or decide like that's the problem. It's that is not a great area, but on a much higher time frame. On a smaller time frame, like I said to you, there's smaller moves. I'm telling you that's a 1-to-1. Even it coming up here is a smaller kind of range. All right. So that's why this wouldn't be a 10 out of 10 out of 10. 10 out of 10 out of 10 would have been taking it from up here and saying that we want to sell it with our stop above this level, or better still, up here. Yeah. Would have been like, yeah, this is a really strong trade. At the moment, we're kind of in this area, and we more than likely will see some real volatility come into the market today at approximately, from about 130, and maybe even continuing. Yeah, then later on in the evening, we're going to see effort. And then again, we might see nothing might happen until later on in this evening, about 7 o'clock, when men are looking at FOMC minutes to see what's going to happen. So we don't know either way. All right, we do not know either way. All right, but that GU just distracted me because my alert started ringing. Let's have a look to see if it's continuing to push up. Let's have a look if it's continuing to push up. Looks like it to me. Okay, it's just doing a hokey cokey right on the edge, right on the brink. Let's put another alert in here and go back to looking at 30. Okay, or the DAX. Yeah, so we're here with it, and I'm thinking to myself, this market may do this, ping up here, or it may decide it wants to start pushing up. Why? Let's zoom out, look at the bigger picture. The bigger picture is we're at the bottom, potentially, of this little blue range, and the market might want to push up into these levels. Yeah, hence the reason why potentially a buy is on the cards. Now, yes, we are at the top of this much bigger range, but this is a much bigger range. Trust me, the distance between where we are here and up to that yellow line is over 1,000 pips. Okay. Now, that doesn't mean that, we don't understand that we're kind of coming up into this premium range. It just means that if we want to take trades anytime soon in this market, we've got to understand that it's not going to be 10, 10, 10 because we're not at the top of that range. All right. But at the moment, we have seen this market price break outside of this market. And in my opinion, we have seen some smaller indications, some corrections, and some continuations. And now, my bias is for a buy in this market, like so. Okay, at least probably capturing above these highs in here. There's imbalances behind that the market might want to come and close in here. At least possibly doing that. That's what my energy is saying. Even though the market is currently just doing the hokey cokey. Okay, so it came down here, broke this minor structure on a 1 minute time frame, indicated, pulled all the way back up here, corrected, didn't break this high, continued down here, closed like it wanted to become bearish, but then it tapped to the bottom of this range that the market was pushing up in, and then we've seen it kind of dancing in between here and here. That's our GU crossing up, okay, which is good. Let's see whether that's going to keep going and do something. But it's like you can see everything's very jittery. There's a lot of news today, and you can see everything's not very decisive. So if you are trading today, do protect your position. Do be grateful for whatever is presented to you. Okay. Now I am protecting my position all the way. Every time I take a position, even though I know it might stop me out, like I'd prefer to just preserve my capital than to be at risk. All right. So what does that mean? That means there's a lot more hard work. Okay. Because you may get stopped out a bit more, but in a volatile day, you can either stay away, all right, or be very protective. It's just like, you're gonna go out to surf. I don't know if anybody out here surfs. Probably not. That's just you know, I've just said that based upon stereotypes. Okay. But if it was a mad, stormy, crazy sea, you're either gonna stay away so you don't drown, yeah, or you're gonna take measures to protect yourself. Whether you're gonna put two extra armband on or whatever it may be, or make sure you tell people where you're at and where you've gone. Like you're going to take measures to protect yourself. And it's the same. Today it may be choppy. The seas may be extremely choppy today. So for that reason, if you're trading, you're going to be trading it so that you can live to swim another day, to surf another day. That's what you're going to be doing. You're not going to be out here like, yeah, this is my last day on earth, and you can just be doing a madness. You're gonna be saying, I'm gonna not go that far out. I'm gonna stay over here by the shore. I'm gonna make sure I tell my wife where I am. I'm gonna make sure I got all my protective gear on. And yeah, because for some reason I really want to surf today. Okay. But yeah, my outlook for this is maybe this market's going to fly up here. We're also making a little bit of a flag pattern ish. Yeah, ish. I'm gonna pop a little alert above here. It's interesting. The next 1 minute, in fact, we're gonna get some news. Let's see in the next 1 minute. Let's see what happens. Whether or not we're going to have an immediate reaction, I don't know. I do not know whether we'll have an immediate reaction or not. Maybe the market's going to just sit around. I'm just opening up on my chart over here to see what can happen. Let's have a look. So that news is coming out in 14 seconds, 13 seconds, 12, 11, 10, 9, 8. See what happens. 5, 4, 3, 2, 1. The news is going to be coming out now. Seeing the information. I don't know whether we're going to see any type of reaction from that. I'm just having a look to see whether that has a bearing. Maybe it's got to settle in first. See if there's any type of reaction to that news, depending on how dramatic that news was. Like I said, my bias is that bearish bias, but we'll see. Uh-oh. Looks like it's going for it. Okay, everything ringing. What's ringing? Yeah. Looks like it's pushing up there. That's what I think it's actually going to go and do anyway. I'm trying to find the symbol in my cashback Forex, which I can't find for some reason. Oh, there it is. I'm just looking at it. Well, obviously the news, maybe it hasn't settled in there. Let's see what happened. So basically, they predicted the consensus is going to be 0.5. It was half of that. So it's 5 times that, a better than expected result. And retail sales over here, I thought it was going to be 0.2, is 0.1. Now, a better than expected result. Let's have a click in here and see something, okay? It says a higher than expected figure should be seen as positive bullish for the euro. There you go. That aligns with what I think this market wants to do, even though it hasn't done anything yet. Though the news has come out, maybe people didn't care too much. But, I think it's going to be bullish. Like, again, it kind of supports what I was thinking. I'm just trying to see this here in regards to, because I haven't traded DAX in ages. I'm just looking to see what lot sizes look like, what they even look like, to just remind me what they look like. I don't know if that's the case. We'll see. I'm going to check it. I just want to check this lot size on DAX. Wait for a close first. I just want to check it. Now, you hear me do this sometimes because I told you guys to do that. I said that, sometimes when you're using your calculator, your cashback calculator, your contract size in here is something you have to kind of work out. You really don't have to work it out as such. You can go to MT5 and you can check it. But if you're going to go and take a trade for argument's sake, you might turn around here and say, for example, you're in here and you've got your account size and you're trying to take a trade, but you're not too sure when this number comes up, because just a minute ago, the number came out like this. And I was like, 153 lots. That sounds a little bit, a bit mental. So I'm just, I'm thinking to myself, maybe it's more so it's like that. And I'll just check it. I'll just go in and I'll just check it. I'll just say, you know what, let me go and check it, put a 1.5 in there and see if it's 10 times less or 100 times less than what I want it to be. Yeah, like I'll check, because if I'm looking at this to myself, I might try and trade the DAX today. I want to immediately have an understanding of the lot sizes and what lot sizes looks like in that particular asset. Okay. So I'm waiting. I'll put a couple of an indicator here, alert, sorry, here. And I am going to check if we get a closure over here. I'm going to check that, potentially get in for the buy. But I'm just waiting at the moment. I'm just waiting and having a look. We've seen a big bearish spike in the GU that just stopped me out for nothing. Let's have a look over here. All right, we've seen a little bit of a spike in here. Maybe I made that mistake. I got in a bit early. All right, but people that place their stop below this swing low, you're still good. Okay. Now, like I said, today I can see just from the behavior of the markets, it's going to be a little bit hesitant. There is CPI. There's lots of stuff happening. I'm saying to you, remember, this was a very small opportunity. I ultimately want to be in this GU for the sell. Let's explain why. Let's have a little overlook why. It's because this market is a bearish market, has been bearish, has tapped into these highs, in my opinion, this premium level, and now broke structure bearishly, retraced, and I'm waiting for this market to ultimately do this. Make a lower low. Yeah, this is a low. I'm waiting for it to make a lower low below this level. All right, at the moment, we're kind of consolidating and going sideways in here. And I'm waiting for it to make a lower low. Okay. In fact, what am I saying, Mad? I didn't get stopped out on my GU. I apologize. It wasn't my GU. It was a Bitcoin position that I was in. Just stopped me out for a small amount of money. It wasn't no loss though. Something I was in from yesterday, and it was just sitting in there, moving very slow overnight. That's not a problem. The GU is still sitting there. But yeah, so this is ultimately overall what I want to do. I just think that to myself that the market may, because we're in here, be stubborn first and push up to the top of this range from a premium, all right? And then maybe start tumbling from there. But we're in the middle of this range, this little green box, and it could decide now from 50% to say, you know what? Nah, we're ready to start rocking and rolling, because this range, though it looks like a little box, it is over 300 pips. So it's not that little of a box, all right? Let's have a measure of it. 360 pips. All right. So I'm thinking to myself from here that this market might want to push up into these little levels here, these two imbalances that I've identified, and then we might see it turn rolling off. Either way, we're in the middle of a range on a much bigger time frame, which is already a little bit of a minus. But on smaller time frames, we can see this actual price breaking outside of the market, making higher highs, higher lows, higher highs. And this market is currently trading within those levels. If I drop to my 1 hour time frame on a short term, even though I want to sell it overall, this market was in some consolidation. Have a look. This market was in some consolidation, and we indicated, yeah, and we corrected, and we've continued up into this level. And like I said, I believe that this market might, on a short term, have a little bit more of a push up here, at least to close this imbalance, but potentially to push up and close further imbalances. Yeah, so if your stop was below here, below this swing low over here, then you're still good if you did manage to get in. All right, like I thought it stopped me, I didn't. I was a Bitcoin position, so like I'm still in this. It's only a small position. It's not big risk. Okay, to push up over here. And what I was saying is that I'm going to hopefully be passing I've got 2 accounts, 2 fundeds. I'll be hopefully by today I'll pass the first phase of my second account. I've got the second phase of my other account there, and I'm just taking them, trading them how I want to do. So I'm gonna pass both of those accounts this week, God willing. All right. And most of the trades, guys, have been from trades that I've looked at and broken down from the Breakfast Club and just kept an eye on them. Okay. A couple of times we've had people in the call in the room and just ask me what I'm in and what I'm looking at, what's that noise they hear trades opening and closing. I'll tell them. And I am definitely trying to get better at updating our Discord group. But for people that are, like I said, in any trades or looking to take any trades, the whole point is that you turn around in the breakfast clubs or before you take a trade and you say to me, Jay, I'm looking at this trade. Remember, the United in Funded initiative where everyone's got this little funded account is not about me giving out trades. You're not going to learn anything by that. And when the trade doesn't slap and hits stop loss, you're going to be thinking to yourself, right, Jay's a clown. Yeah. It's about you saying, I'm going to take a trade. This is what I'm looking at, Jay. What do you think? Yeah. And then us holding each other accountable when you're in that trade of like, Jay, I'm in that trade, it's profitable. Where do you think I should hop out of it? And us having these discussions and these talks and being able to go backwards and forwards and understand, what it is we want to do and how we want to go about doing it. That's what it's about. Like, if you guys are just being quiet and you don't want to call out your trades, it's very difficult for me to call out all of my trades. I'm always trading. I'm always looking in the markets, etc., etc., etc. Yeah, and sometimes it's just not feasible. But what it's about is, like I said to you, for the likes of, I don't know, off the top of my head, Jason, Alan, a couple other people that's actually doing funding. I know Nathan, a couple other people that are actually doing their challenge at the moment. It's about that. It's like you're looking at something and you say, Jay, I'm looking at this for the buy. I'm going to say, okay, from what level to what level? I'm going to say, okay, I'll say, yeah, it looks decent. Thank you. Or better still, yeah, or better still, just being able to say, oh, that doesn't look too good. There's a couple of times we've had a few people say something to me. I'll be like, I don't know. Have you looked at this little imbalance over there? And they're like, you know what? I haven't looked at that imbalance over there. All right. Don't worry. Leave the door, please. Sorry. Yeah. But yeah. So don't be shy to put it out there of what you're looking at doing, what you're thinking of doing, etc. Do not be shy. Just put it out there. If it's not myself, maybe somebody else can look at it in the group, whatever it may be. Do not be shy. All right. Any questions about anything, guys? We're gonna go and look at another pair before we finish up. Is there any particular pair you want to look at? Remember, today is active. Yeah, today there's a lot of things going on in the markets. Have a look. Yeah, red, 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 red. All of these are red folding. CPI. Yeah. All of this stuff is happening today around 1:30. Expect volatility. Either stay away from the markets because you don't want to drown in the Atlantic Ocean, yeah, or grab your surfboard and understand that everything's got to be, well thought out, well planned, understanding the risks. Okay. Any particular pair does someone want to look at?
Go on Euro USD. I know it's a bit basic, but
no market's basic, bro. They all do the same thing. Like whichever one you want to trade, there is no markets out here that are basic. They just have their own little attitude, and they can all give you the monies. All right. So look, if I go and I zoom out, I'm gonna go all the way out of our Euro USD, see what's happened. All right. So I'm gonna delete this stuff. I don't need it. Here's one I made earlier. Now, very simply, I can see that this market is a bearish market. It has been making lower lows and it has been making lower highs since 2007. Okay, this is a guide. I can see this market came up here, pushed up into here, made some ever so slight, relatively slightly lower high, pushed down, broke structure, making a lower low below this level, making a lower low below this level, grabbing all this liquidity below here. And then we pushed up to, this is potentially an indication of what it wants to do. This is a correction, and this market is thinking about it at the moment on a much bigger picture of potentially does it want to come down and break this structure. Okay, if I go to my daily time frame, have a look. We can see how the market has pushed up like so. Why have I drawn my line like that? It's because I need it to touch the last low before the highest point. From its origin, I want it to touch the last low before its highest point. Okay, like so. So therefore, the market is currently trading sideways in here. It broke structure bearishly. Have a look. Broke this structure here, yeah, and then it came back up, breaking some minor structure again, pushing all the way back up into here, and then it came all the way down here and broke this little structure again a little bit over here. So it's kind of doing the hokey cokey. It's doing the hokey cokey in that green square, and even another little hokey cokey, you might as well say, in this square over here. Okay, and we're kind of exactly the same as when we was looking at the GU, because EU and GU cousins, kind of sitting in the middle of this range. We're in the middle of the middle. It's not the best place for us to start deciding the range, but that's a much bigger time frame on a daily. On a smaller time frame, of course, there's going to be opportunities because that range, remember, it was about 360 pips on EU. On this one here, it's like 800. It's about 800 pips. Yeah, so it's a big range, 800 and something pips. Now we can see in here the market was pushing up here, making higher highs and higher lows. If I was to draw a line, it would look like this. Why? Because it's taking this last low before this highest point. Yeah, if I was to draw another line on a smaller time frame, it would look like that. Why? Because it's taking time once to touch this last low before this highest point. Yeah, but the market has prices broken outside of that range here, and it's dancing around. So, like I said, the market's trading within this green box. Okay, so personally, I'd like to see the market do something outside of this box. So I'm going to click to simply place an alert over here. Now there is smaller opportunities we'll go and look at, but I'm going to place an alert here, crossing down. I'm going to place an alert over here. Market starts to cross up. Where are my alerts? Where's the alert? Where's the alert? When the market goes and wants to cross up. On a smaller time frame, we can see that the market was bearish here, then bullish, broke some structure, got to this level. So it's made a lower high, and then it's got bearish again. If I was to draw some lines in here, it's a bit annoying because this little spike kind of messes some things up. All right, so I'm going to draw that line in here. All right, and maybe if I wanted to, I can say do that. Okay, and therefore right now at this moment, we're at the top of that ugly looking yellow range. Maybe we might see some reaction in here, coming bearish. Let's drop our time frame down to an hour. Let's have a look. On an hour time frame, we can see, I'll draw my lines relatively okay. Have got this spike here, but I'm ignoring it. All right. And we can see the market prices at the moment broken outside of the market, doing a bit of a hokey cokey. All right. A bit of a hokey cokey in here, sideways action. Okay. Now we can, once again, very similar to the GU. Okay. See that imbalance that's sitting above here. That is definitely a concern for me, that the market might want to come up in there and close up that 1 hour imbalance. But at the moment, we can see that the market is going sideways here, waiting for CPI possibly. Yeah. Waiting for CPI possibly. I would place an alert above here. This is what, like I was saying to you, that potentially there may be a smaller move, like a push up. That might happen to close some imbalances. And then afterwards, we might see that market, just like the other one, getting bearish. Okay, let's have a look. I'm going to look above this area. Oh yeah, it's exactly the same. That may be our first little one-to-one I said. And then there's this other concerns. I said to you, the market could. Let's go look at a quick J30. Just about come and break up above here now. I said I wanted to test it. What's that saying? That's saying about 20 pips. I'm just looking over here to see what 20 pips works out. I'm going to test to see what lot size should go in there. Okay. It's pushing up. How many? Was long left? 55 seconds. Well, to be fair, there was a bit of a close here on a 1 minute time frame. Okay, cool. Let me just test it. Let me just test the thing. All right. And then I put in a little lot size in here. See what happens. Now, what I've done, guys, I've got in very small, just testing, making sure, and I was correct. Okay, that's not a problem. We'll leave that in there. Have a look at our GU. It's going. Yeah, it's going. It's going. It's going. Okay, it's going, which is good. Okay, and I've tested that, and I was just talking about EU. All right, which I was saying is very similar. So this here is the other imbalance that I'm saying that if the market wants to get troublesome, it might decide to just fly past this high, pushing slightly outside of the range into these imbalances before then deciding wants to dump off. Yeah, and if that is the case, then there may be an opportunity from this consolidation, if we see indication, correction, continuation, to take this trade for here, to get these little 20 pips there, and then continue pushing up into these levels here for a quick 50 pips. All right, it's not impossible, but we can't just hit that button, take that trade based upon faith. We have to wait for some sort of confirmations. All right, and my confirmations I'm waiting for is clear indication, yeah, clear correction, clear continuation. All right, so like I said, I've got my alert one here. Did I put one here? I thought I did. Didn't. Let's put one in here. Add an alert when it crosses up. And there's no more I can do with this. I don't want to trade it in here. This is fruff. I want to see what it does if it gets outside. Oh, I did have the alert in there. I just put two. All right. Okay, that's fine. I'm going to move one. All right. I want to see what happens when this market breaks outside of this yellow box. All right. That was actually maybe a bit cleaner to mark up than G. Does that make sense there, Jivan?
Yeah, 100%.
Yeah, so I want to just quickly give a recap of what I've just said on that so that it really cements for people. This market is a bearish market. It is making overall lower highs and lower lows. At the moment, we're sitting in this little box at the top of a premium. This is the premium line, meaning that fingers on the trigger, get ready to sell. Now, could this market decide to push up and get cheeky and before it sells? Of course it can. It can do it once. Yeah. But my overall, like the bullets that I've got loaded is sell bullets. Yeah, that's what I loaded up in the clip. Now, whether or not that's going to play out and I can just, sell to my heart's content is something else. But that is the overall little bias that I have. Sorry, 1 second. All right, that's the overall bias that I'm having right now of this market. Now, if we drop our time frame down, we can see on a daily time frame a bit clearer now how the market has been, trading within this range. It came up to this high point. This is the highest point. Then it came down and broke structure here. Okay, at that point in time, I'm expecting to see a retracement, a correction, and a continuation. This one corrected and started coming back all the way up in here, breaking more structure. And then now I'm saying, okay, now you should be ready to rock and roll down here. And it's still doing a hokey cokey now in between this low and this high. So it's in this area here. So that's why I've boxed them up with these two boxes. Now I'm saying to you right now, the market may decide on a smaller time frame. Yeah, on a smaller time frame. And this is the daily. We're on big daily structure. Yeah, we're in these boxes on a daily, but this is a huge range, like 800 and something pips, I believe. When you drop our time frame down, you start seeing the same stuff. The market came up here, got bearish down into this level, pushed all the way back and said, here's the range between this angle here, touching these data points, and here. The question is this market going to come and start breaking up here, trying to get to the top of this green range? Or is it the top of this yellow, smaller Russian doll that we're going to see it coming down here? Yeah, I think that potentially that's what's on the cards like that. But I just think that before it does that, it might do something silly like that. 1 second, guys. Sorry about that. So if we zoom in now and see what's going on in here, because we have to zoom in, we go, oh, I didn't see you. Oops. We go, oh, I didn't see you. You're consolidating. You're going sideways at the moment. Oh, I didn't see you too. There's a big imbalance above. Yeah. Oh, I didn't see you. There's actually a big imbalance below also. But we can't do anything until we see what this wants to do. Does it want to go up here first, close this imbalance? When it gets up in here and closes in balance, I'm going to be looking at structure. Does the structure start getting bearish, breaking structure on a smaller time frame, saying that it wants to turn around and start coming down here? Or is the structure just going and rocketing past this height? I don't know because I don't have a crystal ball, but I can see these concerns. There's imbalance above there. We can see imbalance here. There's imbalance below. And there's news coming out. Is that a coincidence that the market is positioning itself, that it's in between two imbalances, it's in the middle of a range, in the middle of a range? It's showing you that, look, I can do absolutely anything right now. We might see this news come out and it might do all of them. It might do this. Don't get twisted. It might just do a Hadouken, star, L1, square, circle, and it might just go mad and do something crazy here. And this is what that volatility of this red folder news could do. We could see both of these things happen very quickly. We could see this happen first. Zup. Then you can see zup. Then we can see it coming back down here, zup. Then going back up here to close this imbalance. And then deciding, tomorrow or whatever, maybe it's just ready to start going down. We could see all of them happen. All right. That's what volatility means. Yeah. Volatile. So either way, that's that. All right. Any other one, I'll quickly go look at another pair. If somebody wants me to look at another one, I'll quickly look at it. Does anybody want me to look at something else?
Yeah, just do a random one.
Random one. Okay, let's go random. Let's look at
random.
Let's look at something they call an exotic pair. All right.
Yeah.
So an exotic pair is something that is ultimately. Let me see if I can even find that.
Where's oil? Do you oil or something?
So let's do oil. We're gonna do something called crude oil.
Yeah.
Or Brent. It's the oil future. Because I'm thinking. I want to find something and make sure I'm finding it right because they name them differently. Find the right one. I just see it. All right, this is Brent crude oil on Oanda. All right, so we're gonna zoom out. All right, we're gonna do the exact same thing because I don't care what these pairs are called. I don't care what broker they're with. When it comes to market structure and price action, it's the same thing every time. Okay, so we can see here personally, I think that this market has been trading within this little box here. Okay, it's been trading within this box here. Now, why have I drawn it like that? This is COVID-19. Yeah, this is when nobody was going anywhere, and therefore oil prices fell to dirt cheap. And if you was a savvy investor and you had some P, you would have bought oil when it hit down here. Because the bottom line is that unless COVID was the end of the world, which some people thought it was, that it was going to pass. And when it passed, people was like, yeah, I'm ready now to go on holiday. I need oil. I need oil for my car. I need oil for the plane. I need oil for the private jet. The yachts need oil. All of these things need oil. And you would have made an absolute killing. Okay? Because you would have bought oil when it was all down here for 15.5 a barrel. Okay? Or wherever it fell to. Yeah, to the point where it went to, look, 140. Yeah. Okay. So having a look at this on the bigger picture, we can see that. And we can see that the market was bullish, making higher highs, breaking structure, higher lows. Or furthermore, yeah, making higher highs, higher lows, higher highs, higher lows, higher highs. It came up to this level at the top of our box in a premium. And we've seen a reaction to that. Oh, what a coinkydink. That we just drew a little box and we saw a reaction to that box. Okay. Interesting. We saw the market getting bearish in here. Let's have a look at this. Goes to the daily time frame. Didn't quite break this swing low here on a monthly. See? So the market is kind of trading within. It's kind of trading within this little range here. If I was to draw some lines, this would be the low before this highest point, and we're trading within that little range in here. See? The market broke some minor structure coming down here, but came down here to this kind of discounted price. And people's like, bro, no, we're buying. And it price broke outside of the market, making a higher high, retraced all the way back down, but not breaking this structure and now it's continuing to get bullish. At the moment, price is trading within this little range. Within that range, price is trading within here now. Okay, so ultimately, right now, if we was to draw some lines, we're going in a structure like this, bullish structure like in here, in this range. Okay, and we're at the top of that little range in here. We're at the top of this little box, which is a bit of a, and we're at the top of this trend, this yellow range. So at the top, we're at the top, near the top, at the top here. I'm not going to be in a hurry on a daily time frame to be buying into that wall. Okay, if I was to draw some more lines, I'll just drop to my 4 hour. We're getting one angle looking like this. I'm going to make it blue. How am I drawing this angle? Data point, I'm touching. All right, touching that data point, and I'm doing that. We're currently within that little range there. If I go smaller than that, of course I can, and I can keep going. All right, we can see that over here, that would be an angle, all right, of the market. Make it. And why am I drawing it like that? So I'm touching that last low before this highest point. And we can see the market's come here, hasn't actually broken out of that structure, hasn't broken this low. The market's trading within here and here. But we're in this premium area, top of these little ranges. Like, I'm not in a hurry to do anything until either A, price breaks outside of here, or B, I don't even know if I really want to start trading the retracement down here. I don't think I'm bothered. I could be bothered with that. If it breaks this structure here, starts doing something else, then maybe it wants to come all the way back down to the bottom of this level. I don't know. But at the moment, I'm looking at this. I'm on the 4 hour. So in fact, let's just work from the 4 hour. We're trading within here and here. Let me drop our time frame down to the hour. We made a lower low, breaking structure, indication. We corrected up in here. All right, started doing an absolute hokey cokey for a little while. And this could be the continuation from here, the market coming down here. We haven't broken where we've corrected. And where we corrected was all the way down to this wick here. We haven't broken that level yet. So if we was waiting for a closure, we haven't actually got that closure yet below the correction. We haven't. Now, if we was wicked and bad, which we are, we could have gotten in here when the market started to break structure if it broke it correctly. Let's have a look at it on a 15-minute time frame. You see, the reason why we wouldn't have been getting in it over here, for argument's sake, because someone says, why here, Jay? I'm going to explain to you why here. So clear. Strategy so solid. Oh my God, the strategy is so damn solid. It keeps proving to me how solid it is every time. Because look, when this market was coming up here, look, making a higher high, then a higher low, then a higher high, then a higher low. We're looking for structure to be broken. This is structure. It indicated smash, it broke structure, it closed over here. Now we're waiting for another closure below this wick to confirm that the correction, the continuation has happened. It doesn't close below this wick. Let me tell you something. This is not a coincidence. I see this. Why would it come exactly to the other wick, to the millimeter? Not close outside of it, but just give a little wick, because it's just taking the piss, basically. Just basically saying, no. I thought I was going to close, but I'm not going to close. And it went all the way back up in here. All the way back up in here. Now, to the point where, in fact, I'm not even going to call this, because I actually thought this here came up to a higher point. It didn't come up to a higher point. This here, I thought it came to a higher point than this. It didn't. The market's ultimately trading within this little range in here. Okay? Like, so I'm not even going to turn around and say, there is an entry here, but it doesn't really align. You know what I'm saying? Yeah. So right here, you just be sitting here thinking to yourself, what the heck? Because you can't really draw another line in here to say that that's the structure, because this doesn't come to higher than this point here, this wick. So this is the highest point. This price that it got to over here, 91.585, was the highest price it got to within this time period. Even though it's a wick, it got to that price. Somebody sold at that price. So you can't just ignore it. All right. So at the moment, this is a bit, all of this area here is a bit, Now here we've seen it's now started breaking outside of that level. Okay, cool. So basically, this is the indication. This is the big correction, and it's like started to continue kind of down this level, breaking some little bits of structure. But at the moment, still just thinking about it. Who knows what kind of fundamental reasons why this stuff is just sleeping, not really too definitive. Yeah. So the question I'm asking myself, zooming out, is Brent crude oil, at the top of this blue range? Yeah. Is it gonna break outside of this blue range? It's at the top of this yellow range. So that's a premium where maybe selling's gonna happen, but is it gonna break outside of this blue range? Or is it gonna continue to push up in here and maybe break outside of this little, see this gray box that I've got here? Break outside this other little gray box, which is what? If I zoom out, this market has been dancing within. Yeah, because on the bigger picture, price has broken outside of this market and looks as though indication over this structure. Look, like it made a little indication, made an extremely deep correction here. Yeah, because it came from down here, made a little indication that it might want to do something, but it didn't break this structure here, which is a plus. Give it a little tick. And then now it's coming all the way here. The question does it now want to make a higher high? Is the question I'm fighting with. Or are we just saying, you know what, for the near future, Jay, we just want to dance around here for a little while? It could do that. Or maybe even this is just no, I'm not going to say that. I was going to say that this was a correction here for it to come and get them more bearish. Well, it didn't break this structure. So it hasn't given me no indication to say that it wants to keep going down here. If anything, it's giving me more indication that it's shook. It's scared of this little area here. Because it came down here and it was like, nah, we're not breaking that area. It started coming back here. So if anything, it's giving me more indication that it doesn't want to break over here. And therefore, this is more bullish energy. So, my bias is probably at least 60-40, 65-35, that we kind of want to possibly break outside of this little gray box here and push up into these levels. However, I don't want to necessarily hit my button for a buy at the top of this range, because I'm hitting my button for a buy into a wall, into premium levels where other people want to be selling. When it does this, though, breaks this structure, then does some sort of correction back in time here, and then I start seeing it getting bullish again. Maybe I can get in here if I'm really high risk to get in early for it to at least get to this high and beyond. Or I'm going to wait for it to close above this area here. And then I'm going to hit the button on the basis that the market wants to get up to the top of that little box. And then when it gets to that top of that little box, I'm going to be asking myself the same question. We're in a premium now of that box. Does it want to now sell off and do the hokey cokey continuously in that box like it has been doing? Or are we going to break outside of that box and keep going up based upon based upon a bigger bias, a larger bias? No, based upon no larger bias, sorry. Because this is all-time highs for oil, for this Brent crude oil. So really, this is a real premium that when it gets up into these levels, why couldn't it do that? It's done it before. Look, got up to those levels, done it before. Got up to those levels, done it before. Got up to these levels, done it before. Got up to these levels, sold off. Why couldn't it sell off again from up in there? Or do it now? Decide it wants to break out the bottom of it, because we're in this premium level. Now, this is where you combine, man like Alan, people that got fundamental interest, combine their knowledge.
Yeah, Grand Rising.
Fundamentals of why there, maybe. Oh, go on.
That's Iran. Yeah, that right there is Iran. Yeah, because basically Iran got hit, didn't they? They got hit in Syria. Their consort got hit and killed. So killed about 13, 14 people. And they said that they're going to hit back. So the market is running scared at the moment because Iran is an oil-producing country. Yeah, right. Basically, the reason why they've not gone into Iran and mashed up Iran is because it's an oil-producing country. They know that if they hit Iran, oil will go up and it will hit the American dollar. That's why they've not gone into Iran. So that is why it's at all-time highs, because the market is scared Iran's going to hit Israel. They will hit Israel. It may not be mainland Israel, but they will hit Israel, according to the analysts. That is why oil is at highs at the moment.
See, there you go. And then when you combine that fundamental, remember, what Al's just said is he hasn't said something definitive to you. He hasn't said, because of what's going on in the world, it's going to be selling off from 97.540. That's not what he's done. He's just giving you a bias. It's just saying, like, what's your bias, technically? Oh, your bias is that it's going to go bullish. Well, I've also got a bias that is why it should be bullish. And so you go, oh, you feel a little bit more confident. Okay, well, Al says it's going to go bullish because of these fundamental reasons. Plus, I've been looking at it and I think it's going to go bullish based upon technical reasons. Okay, cool. Well, then maybe I'll, be more inclined to hit for the, it's a bias. Your analysis technically and fundamentally is about your bias. What is this technically showing me that I can make a conclusion whether to go for a buyer for the sell? Okay, fundamentally, what is this telling me? That I can go for a buyer for sell. Okay, and am I managing my risk so that if I get this wrong and I'm wrong or the market does something mad, that can I live to fight another day? That's trading, guys. It's that simple. It's not I know this is doing this and that, the third, or all the stuff I'm seeing on Instagram right now, my algorithm does this and that, blah, blah. Okay, yeah, maybe. Because algorithms can, and bots, I should say, can take decisions unbiasedly without human emotion at a much faster rate than us. So do algos work? Of course they work. They do work. I'm not going to ever be here on a course saying algos don't work. You can't have an algo that's making you money, of course. But just know the algo is only as good as the person who sits behind it or the person who coded it. Because if the markets change, which they do, your algo must change. Yeah. And when you so algorithms, and if you're somebody who knows how to code or you're interested in code, go and learn how to create your own algos, yeah, in crypto in the forex markets, of course. Because once you do get an algo that works, that algo is working for you when you're sleeping. So algos do work. Or bots, as you hear them called, they do work. Yeah. If it's a good bot and a good algo. If a man's selling it for $12.99, I'm wondering, like, how good is your bot? Is your bot so fantastic? Why are you selling it for $12.99? Why are you even selling it? Is my question. You got a bot that trades the markets and kills. Why are you even selling it? Yeah. But if you can code your own one, what does that mean, code your own one? That means that we've got our strategy. We've seen our strategy work. And we turn around and say, we're looking for indications, corrections, and continuations on the second time frame, on a minute time frame, for argument's sake. And every time it happens, we take a trade. And as soon as it gets to a 1-to-1, we close the trade. That's what our algorithm, for example, I'm just using an example. That's going to be our algorithm. We're going to code it. So every time we see a break of structure, then a correction that doesn't break the previous structure, and then a continuation, that we're going to execute the trade, and we're going to close out that trade in profit when it gets to a 1-to-1. And we're going to do that on the seconds time. We're going to do that thousands of times in a day or hundreds of times in a day. And if we test it, because with your bots, you can back test your algorithm. You can create the algorithm, code it, write it in code. That's what we want it to do. And then you can back test it on GU for the last month. And if that back test comes out that you would have taken $1,000 to $20,000, then you go, okay, that sounds interesting. And you put some money behind it and you see what happens. That's what these bots are, guys. They're trading strategies that have been coded in, and then you hit play so that you're not dealing with emotion, you're not dealing with risk management. It automatically takes it at a certain percentage of the account size. And it just keeps doing it. Whether it's going to be good or bad, it keeps doing that exact strategy. But the difference is that you can only trade when you're sitting here in front of the computer. That bot, once you hit play, is going to keep doing that thing. And that, like I said to you, that definitely can work. You can definitely code algorithms. And to be fair, even nowadays, I'll even give you some extra source, is that it's not that difficult for you to actually code. Because there's AI now, there's no code coding. And there's actually, like, you could go on YouTube, and I think if somebody was on it within a day, you can learn how to code an algorithm. Obviously, if you have knowledge of Python or PHP, or you've had previous coding knowledge, it might help. But there are no code solutions to allow you to do so. So yeah, I mean, the point I'm getting to you guys is that, this is trading, guys. Managing your risk, sticking with your strategy, and making sure that you can live to fight another day. Guys, good morning. God bless. Thank you for your time. It's 22. We've had a good session.
Sorry, just wanted to jump in quickly. Yeah, as you know, you got CPI today. Yeah. I put something in the group about James Dimon. People can criticize him, but he leads the biggest bank in the world. And as I said, if James Dimon says something, sometimes sentiment does move the market, as we know with Chair Powell. Well, CPI is going to be stubborn, it seems. As you can see, they're looking for, consensus is month on month is 3.4. Now, if CPI goes up to 3.4 and goes even higher than that, if they say it goes to 3.5, 3.6, yeah, the dollar will strengthen. Yeah, the dollar will strengthen. That means that any G10 currency pairs or any pair will be weaker against the dollar. And also, the indices will be bearish. Yeah, I'm looking at Euro USD, and I can see that there's an imbalance below, right? So it's going to come and take that today. Yeah, right at 130, right? That unless the it goes down. I'm talking about CPI now. CPI has become stubborn, and that is why James Dimmon's come out and said, you know what, interest rates may go up to 8%. He's not the only one, actually. There's a number of analysts that basically said, you know what, raise interest rates, right? It's not gone down to the 2% the Fed wanted to. It's becoming very stubborn. And a recession, there's still talk of recession. Yeah. When there's a high, there's a low, and that's possibility for America. Though the American economy is strong, everything's great, but recession comes swift. Yeah, it does come swift. So yeah, I'm bearish for the Euro USD on the basis of the massive imbalance below on the 1 hour, and CPI says it's going to be 3.4, and I believe it might come above that. So if you're in it, it's probably going to be bearish on the indices and any G10 currency against the dollar. Yeah, but just keep an eye on it. Also, we've got the Fed minutes at 7 p.m. today. That's another red folder news. Yeah. So if you're any trades at 7 p.m. today, yeah, keep an eye on it or stay out of it. All right. Any questions, anybody?
Nah, all solid.
Yeah, I was going to ask about you saying about the houses. Who's going to be losing the houses? Is it the American side or is it UK?
No, it will come over here. Basically, if a recession hits America, because they're the biggest economy, the strongest, well, the number one economy in the world, it will hit the UK. Yeah, basically, these central banks they're like work in tandem. I mean, I believe that the ECB are going to drop their rates tomorrow because the economy is the right thing to do because inflation's come right down in the Eurozone. Now, if there is, it's interest rates go 8%, just to say hypothetically, it will hit the state. It will hit the UK. Yeah, central banks are going to be looking what the Americans do because, listen, if the Americans get a cold, we catch it too. Yeah, right? It's a fact, So, yeah, James Dimon mentioned it. I mean, we can take it with a pinch of salt, but I think that, these guys are seasoned. They're in it. They know the guy's a billionaire. He knows what's going on. He's been in it, as I say, you keep an eye on what's going on around the world. Everything around the world affects us. The situation with Iran, oil prices go up. So, your petrol, diesel will go up, because of what's going on in Iran. So just got to keep abreast of what's going on around the world and keep an eye on it. A lot of things happening. There's lots of elections this year. There's a lot of investors waiting to see if Trump gets into power and see what he does before they invest in America. There's a number of things that you can look at. So yeah, just keep an eye on. I can't see a recession at the present moment, but the market is overbought.
Yep. Okay. So what's that happen to our mortgage rates and stuff as well?
If it goes to 8%, just to say our mortgage rates will fly. People are struggling already. They struggled when Liz Truss nearly bankrupt the country. A couple of years ago, mortgage rates went up higher. So if there is a recession in the States, it will come over here. And the Bank of England will be looking at inflation because inflation is a thing. If it goes up, the only thing they can use, they say, is interest rates. And interest rates will go higher. If interest rates go higher to 8%, listen, there's not many men out here who's going to survive that 8%, yeah? Because everyone's used to interest rates at 0%. I remember back in the day, they were like 8, 9%, Yeah. That was back in the day. This generation's not used to that. And if it does come, just for say, hypothetically, people are not, they're losing their houses out here. Yeah, in droves. Yeah, right. It's gonna be stressful, and also businesses will cut people. They're cutting people anyway. They're using artificial intelligence, I don't know if you've ever been to Uniqlo. Yeah, they don't have no staff apart from, you know, the odd staff. You just put the thing in a basket, it calculates it for you, you know? That's
Yeah.
where it's going. So as I said, just be mindful of what's going around in the world. You know, what's the sentiment when people talk? Just say something to take it with a pinch of salt. But you know what? It's about data points. If someone who's influential says the same thing, you know
Yeah.
it's happening. All
All
right.
right. So I'm better off not looking for a yard right now, then it? Because I just got an influx of cash to get my house, but I'm just gonna keep it in my Chase account. If interest rate's gonna go up, then I might as well just keep it in the savings account.
Well,
Yeah.
well, JB, the best person to advise you on that. I'm just giving you the sentimental. You know, end of the
Okay.
day, if you get anything, you need to get it fixed. Yeah,
Mm.
you know, because the rates at the moment, I mean, they're not great at the moment. But I think Bank of England rates are going to come down. However, yeah, we've got an election coming up, and the public finances are strained in the UK. There's a website. I'll tell you what the website is to take a look at. It's tradeeconomics.com. Yeah, it's a good website to
Tradeeconomics.com.
look. Yeah, it's a really good website to look because you can see all the countries' interest rates, and you can see all the countries' debt by gross domestic product. Yeah, our
Yeah.
finances are busted in the UK. Yeah, so public finances. So if you're going to look for a mortgage, you shop around, but get a fixed rate. Yeah, but however, wait till the Bank of England do their interest. I believe it's going to come down in June, but who knows?
All right. That's good, man. That's good information. Thank you.
Welcome.
Jay, you still there?
You hear me?
Yeah, no.
Yeah, I hear you now.
Okay, sorry. So I mean, so where I stand on the whole property things and when you're going to buy a property, the best time to buy a property was 50 years ago. Yeah.
Yeah.
And you know, at the end of the day, unfortunately, a lot of us, if we think about how much our parents paid for their homes, yeah. We're not talking about just the monetary value, we're talking about as a percentage of their income, their annual income. You know, a lot of people could buy their homes for a couple years, a few years of salary. Yeah, maybe they, you know, maybe you can remember, you know, your family home being 50, 60 grand, you know, 10, 20 years ago, or whatever it may be, or maybe what your parents may have bought your property for. Now, unfortunately, you're born when you're born, and you can't go and find a property for that amount of money. Okay, and in proportion to your earnings, there's a very high probability that your property that you're trying to buy is at least you know 10 15 times your earnings. Okay, now that means that this country and the Western world is designed for people to buy property in a partnership, two people putting their earnings together, putting every single drop of savings that they've scraped up in a deposit, which could be easily. There are some schemes that are coming out saying things like 5% deposits, etc. What I always say to people is this: when the markets are having problems, okay, the government needs to continue driving growth. So they come up with these schemes. You can buy your property for 5%. You can buy your property for this, that, and the third. Just understand, if you put a 5% deposit down in a property, it means you owe 95%. So therefore, your mortgage repayments are going to be on 95% of that property, and they're going to be high. And if for whatever reason, property prices take a hit, so imagine I'm using a simple number like 100. If for whatever reason the property prices are no longer 100,000 and you got 95% mortgage, you owe 95. If that property value fell by just 10%, you're in something called negative equity because you owe 95% on a house that's only worth 90%. And for argument's sake, if you need to sell that property, how are you going to be able to sell your house for 95 when everything else on the road's 90? You're not going to be able to sell. Yeah. Or you're going to have to try and sell at a loss. Now, if you're not going to sell, just like when you're in the markets, you only take a loss or a win when you sell, when you close your position. If you're not looking to sell your property anytime soon, and you can weather the storm of paying high rates, then who cares what happens to housing prices? Nobody cares. Doesn't matter. But the whole point is like this: a lot of people, and this is what I tell people, like, there is a value to owning a home. The value to owning your own home is stability. and that's the only value. It is not an investment per se. That's, an asset. An asset is something that you buy that puts money in your pocket. If you buy a
Appreciates.
house, that you live in, it doesn't put money in your pocket. It actually takes money out of your pocket, because every single month you're paying a mortgage, and every single month you're paying to fix it. You're paying for all the other bills and fees and upkeep of a house. So it's not a house you live in. I've never seen as being an asset. You see a lot of people, they feel really chuffed with themselves that they saved up all of their money that they've ever made in their entire life, or maybe daddy gave them some money, or somebody passed away and they came into some money, and they slap it into a home and they think that they've achieved life. They've clocked life because they've bought a house. But that house is not an asset. Yes, somebody's saying, yeah, but you can hold on to it. When you sell it, you're going to make some money. I mean, maybe. But if you probably take into consideration all the money you've put into that property, it's not a great investment as vehicle. You're going to make more money sinking that money into the S&P 500. As a investment where somebody else is paying the debt, that is different. Because then you're going to put someone else in the house that pays the debt for you, that you can forget about it, in the hope that over time you're going to be able to sell it and make a profit. But then that's great, because you haven't been servicing the debt. Hopefully they're not tenants that are phoning you every 3 minutes saying that the boiler's broken. But you're not servicing the debt, they are. And then at a later date, you're able to gain equity, meaning that the house you paid for with your 95% mortgage and worth 90, which means you owe 95 grand. Now that house is worth 200 grand. So you've got 105 if you've been paying a repayment mortgage. You've got some equity, you've been chipping away at that 95, maybe you only owe 80 now. So now you've got £120,000 worth of equity in your home. Like if you're clever, you won't sell. You won't sell it if you're clever. Does anybody know why I said to you that you won't sell it if you're clever? Does anybody know?
It's because you can keep getting money through.
Get money free. What does that mean?
Keep getting money through for your people that are renting the place.
Nope, that's not what I'm getting at.
Because you can refinance. You could keep refinancing, and if you've got tenants in it, then they're paying the money, and you've got more capital. So what
about that refinance? What about that refinance? I'm getting at something, and you're close, but I want you to actually
that refinance is tax free, so you don't have to pay tax on it.
There you go. So this is now we're getting into levels, because like I said to you, this Unity thing is not just about trading, it's about empowerment and personal development and knowledge. The reality is this is how the wealthy do it. They're going to take a property. That property is going to grow in value. They are not going to sell it. If they sell it, they have to pay something called, do anyone know what it's called? When you sell a property? Capital gains tax. That will rape you, with sandpaper. And you don't want that. So what they do is they keep hold of their asset. They keep it in the family. Go and see all the big, massive yards in whatever area you live in. Everyone that lives in the area, there's a nice part of the area where the yards are massive. You're going to go there, and more than likely, this is a good way of telling, in my opinion. This is my way of telling. Go to outside the house and look at the cars that are sitting outside in the drive. Now, if you can see in the drive a Fiesta, a Yaris, an old Yaris, a Range Rover, a Rolls Royce, a van, you're looking at that cross hatch of vehicles. You know that house has got more than 2-3 bedrooms. You're more than likely looking at multiple generations living in that one home. You're looking at dad, who drives the Bentley outside. Dad's also got a little run around, so he does have a smaller car. But then you're seeing some random other little car, like a little, Renault Clio outside. That's probably more than likely the kid's car. He's probably 18, 19, that's his first whip. Then you're seeing some, like, you can see, because there was big houses, more than likely, grandma used to live there. And dad lived there. Do you understand what I'm saying? And maybe even it's been in the family, is my point. Because selling it makes no sense. Because they know house prices are only going up and up and up. That house that they bought for £1 million 100 years ago is now a £12 million estate. And when you refinance, i.e., remortgage, i.e., loan money against your property, it is a debt. And that debt is not taxable. Then what do I do with that 300 grand that I just pulled out of my house? I go and buy another house. I go and buy another house. I put the working class people in that house to service the debt. They service the debt for me, and I just do the same thing over and over and over again and build my portfolio. Now, the point is that you need money to buy the house, or you need to work out a way to generate some sort of income to go and buy these houses. But ultimately, that's what you would go about doing. Yeah. So when it comes to buying the houses, going back to the original thing that you said there, is that do what's best for you. It might not be the right time for you to commit, i.e., drop your deposit money. This is all about the deposit money. Because if you're not paying like regardless whether you're renting or whether you're buying a house, you still got to pay it, whether it's going to be a mortgage or rent. And someone's going to say, well, I prefer to pay a mortgage because I'm chipping away at it. Well, simple, yeah, I guess so, a little bit. But the reality is that the money that you drop in deposit, whether that's going to be 100 grand, because remember, there ain't no 100 grand properties I know in London. So let's just say an average property. Let me give you the maths if you don't know the maths. All right. So this is the maths. Let's go and say a £500,000 house. Now, right about now, if you're talking about you're grown up and you want to buy a £500,000 house, this is average. Yeah. Yeah, maybe slightly above average, but let's say 500. Okay. Now on that, let's imagine that you was to put in a 15% residential deposit down. That means you will have to have 75,000, pounds to put down on this £500,000 house. Now that's not to mention the stamp duty. That's not to mention the legal fees. That's not to mention the costs of moving into a new property. So you're easily going to spend 85 to 90,000 pounds that you're going to need in solid cash between yourself and a partner, or just yourself if you got it like that, to put down on a property. All right, fine. And then at that point in time, this mortgage is now, you've now got a mortgage of £425,000. Now, if you want to see roughly what a £425,000 mortgage looks like, let's just go and go to here. I'm going to use their calculator. So the calculator should be working, but you might be able to find a calculator anywhere. Let's go to for sale. Let's go find any house. In fact, let's go and find a £500,000 house to make it even easier. Okay. Let's go max 500K. And let's go here. This is, look, run-of-the-mill house, guys. As in, when I say run-of-the-mill houses, I mean, it doesn't have a pool and a balcony and
that's
whatever
a flat,
maybe.
bro.
Oh, that's not, it's not even a house, it's a flat.
That's a 2-bedroom flat for 500.
Yeah, so whatever it is, like, let's even go there. Like, let's just say that because I've seen tremendously worse here. But let's have a look here. Let's go down to their calculator. Can you see here? I am buying my first home, 500,000. What's this? Is that stamp duty? Yeah, this is stamp duty. Okay, they've adjusted stamp duty. So stamp duty is actually not too bad for your first home, because when you buy your first home, you get some allowances. So he's only got a small stamp duty, which is interesting because they're always changing this stamp duty thing all the time. Yeah, that's how they try and entice people. They say, oh, stamp duty is this, that, and the third. So let's imagine that you've got you're putting down, this is a 10%, but no, we're putting down 15% because you just got it like that. All right. And you're taking out a term, depending on your age, all right, of maybe, I don't know, it's 35 years. And this is, I'm not going to play this interest rate, but they've got it at this number for a reason, because maybe that's the average that it's at. You still got a £2,300 mortgage after dropping 90, maybe that's the 75 grand, plus this is the 78 grand, plus legal fees, plus removal fees. We're still at around about 85. So after you drop the 85 grand, you still got a £2,200 £300 mortgage every single month. So don't get twisted. I'm not trying to say to you don't, because obviously getting on a property ladder and doing that is great, but just understand that it's not, this country in the UK, we place tremendous onus on owning your own home. More than any other European country. When you go to other countries, they rent with no issues, because they come to the conclusion that maybe that 85 grand, you could do something else with it. You could invest it. You could start a business. You could travel the world. Who knows? But in the UK, we do put a lot of onus. Let me just sink that in the property, and yeah, then I would have achieved life. And I'm telling you something for free. When you take out a mortgage, especially for £425,000, over the duration of the time that that mortgage is, you will pay back the bank at least 2.5 times that, I believe it was, if I can remember correctly. Let me check that, because I might be wrong. Maybe it's just 2 times. All right. Amount. Can I ask the question? Let's ask ChatGPT. Should I ask ChatGPT?
Wouldn't it be the interest now?
Yeah, it's the amount of interest. The amount of interest
So it'd be times the 5%.
payable
On like a 25-year mortgage plan or something like that.
Forget 25 years. 25 years would be high, but let's just put that on it. Payable on 25-year mortgage. You only really clock this when you see your statement. I'm trying to see it. I don't want to see the calculator. I want to see the actual amount, your redemption that you paid back your mortgage company. I don't know if it's going to show you the total amount payable. All right. They normally don't, because obviously they don't want to show you. Yeah. But it's only when you look at your statement and look back at it, you're going to basically, in a nutshell, you're going to look at your £425,000, and you'll be like, at the end of your term, you'll be like, right, I paid back the bank, $1 million too, in real money. Do you understand what I'm saying? Over a duration of 30 years or 40 years, whatever it may be. Now, like I said to you, I'm not trying to say don't buy properties. Property is solid, but definitely having investment properties. This is how you're supposed to do it. If you want to give man the blueprint, this is how you're supposed to do it. This is the blueprint that I wasn't able to be privileged to, and my culture doesn't do. Are you ready for it? This is it.
Yeah.
You live in your mum's house. You're working. You find a job. You're making good money. You stay living in your mum's house. You stay there. You're not going nowhere. Mummy is not getting rid of you for nothing. Yeah? You're going to take your money. Yeah? You're going to take everybody's money in the household. You're going to pool your money. You're going to go and buy a investment property, but you are not going to live in that yard at all. You're still staying at mum's house for another 7-10 years. So you're like, I don't know, you're 18 now, you're working, boom, you're now 25, still in mumsy's house, 35, still in mumsy's house. You've owned that house for the last 10 years. That house now that you bought for 200 grand, if you bought at the right time, maybe back in the day when it was a little bit, maybe they kind of say houses have a kind of 7 to 10 year cycle. It's probably bigger than that now, where we're near the top of a cycle. But imagine you bought down here, yeah, and then 7 years or 4, 5, 6, just say 7 years passed, and that house that you bought for I don't know, 500K is now 650. Okay, and now when you're at 650, now you've got 150K worth of equity that you can take out some money, buy another house. Still at mumsy's. Everyone's happy at mumsy's. Let me tell you why you're even happy at mumsy's as well. Because everybody shares one big pot of food. When you need childcare, you're not out here trying to look for £1,500 a month childcare for your kids to do school run and to pick them up. Yeah. You've got the support of your family morals and mumsy. When you want to nip out, you and Mrs. want to go nip out and go to the cinema. You're not looking for childcare. You can just say, Grandma, look after mumsy. Furthermore, Grandma's getting on and she needs you to look after her anyway. Yeah, make sure she can get up and down the stairs or she's taking her medication. You have that family unit. Yeah. Think about all the cultures that are successful. Am I describing them? Sounds like I'm describing them.
Yeah.
Yeah. That you're there sitting in the house. You're sitting in the house with everybody. Furthermore, because you've got now 1, 2, maybe even 3 generations, because maybe your younger son is just turned 18. You're all able to not necessarily be in that house. Maybe you're living in a big thing. Yeah. Maybe you've got a big house. Maybe that house has got 5 bedrooms. Maybe you don't even see Grandma because she's just up in her side of the house. Maybe you got a nice outbuilding that you guys go and the kids are outside. Maybe you got a proper drum there, but you're all in the yard pooling your resources. You understand it makes no sense for look at the flip side of the coin. You ready for the flip side? Yeah. People that I've in my culture, yeah, and where I come from, people that look like me, is the first thing you want to do is get out the family home. And you take the little money that you manage to scrape together, which isn't even the 90 grand. It isn't. It's actually 35, 40 grand. And you go and find wifey, and wifey happens to have a little bit of money. You know where she got her money from? Her parents gave her some money from their house or whatever it may be. And you're able to come together in a union that may not last. Oh, I'm saying the things that I shouldn't say. Or you may need to come together with another person and put your money together and buy a home and struggle to make sure every month you can find this, because this is just the bill. This isn't your electric, council tax, blah, 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 light bill, blah, 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 just so that you can stunt to your brethren and say, yeah, we bought our own house. But this is hurting you. And God forbid that you and your partner break up, which is possible. Look at the maths. Don't listen to me. Just look at the statistics of relationships that break down, marriages that break down. Yeah. Then when you've broken up, then what are you doing now? I got a friend right now, and he's right in the middle of divorce, and how his a property that was actually his parents' property, yeah, that was left to him, she wants half. Yeah.
Wow.
So look at that scenario opposed to the dream game plan of you're in your family home. Mommy can't divorce you. Daddy can't divorce you. You pool your resources because they've got some money from their years of working. You're working. I watched a program. There used to be a company. There was a company in Ilford called what they called? It was a clothing company, designer clothing company. They were called it's not what they called in Ilford. Maybe they're still there now. Designer clothes.
About Child's Play.
Child's
What,
Play. Charles,
Yeah,
not Z and Clo.
exactly.
I'm talking about Child's Play.
Child's Play.
Child's
yeah.
Play is a designer clothing company, yeah? That was in Ilford. And the guy, the family, Asian family, started doing a program. There's a program on TV about them. Yeah? There was a program on TV about them. Like where they was going through, their thing and blah, 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 blah. And the guy was, I don't know, 50 plus with his family. Bearing in mind, he owed Child's Play, a successful business in Ilford for long. And they was going to buy their first home. They'd been living at Mumsy's for the last 25 years. Now, let me tell you something. The home that my mum was going to buy, it was a proper yard because he's able to pool all of his dough, do what he's doing, invest in his business, etc., etc., etc. I'm trying to find a program anyway. Yeah, this is Child's Play. These are the guys. This is the guy here. This is his name. I remember because I see him in a program. And it just puts things into perspective. And I'm saying to you, that's the way the Jews are doing it. That's the way the Chinese man are doing it. That's the way the Indian man are doing it. They're coming over, they're living in the yard. They're staying. I know my next door neighbor from my mom's house, he's still in the yard. They just done extension and done whatever it may be. He's still there in the yard now. Now he's man of the house. He hasn't had to buy that yard. He's just had to maintain it and start pooling his resources. They're living comfortable. No one's out here struggling on the basis that everyone's trying to have their own car and their own. But the way this thing's designed, unfortunately, in our culture, the first thing we want to do is go get our own whip, go get our own. We can't wait to get out of the house. Yeah, and when we do that, we put ourselves in a situation. So that's the goal. That's the dream, guys. If I can do things again right now, I'd be living in a house with my mum. Do you understand? With my thing, like in a big yard, looking after her, she's looking after me. No one needs to worry about who's cooking tonight. Mum's is cooking, or maybe my partner's missus is going to cook tonight, or I'm going to cook for the whole family. No issues about childcare. I'm not doing school run. I'm not telling you guys I can't do breakfast club because I got to go to school run. Do you understand what I'm saying? Like it would have been like that. All that money we pooling together. Then when we see in opportunities, whether that's going to be investments, whether it's going to be houses, whether it's going to be businesses, we've got enough resources as a family to pool our. Furthermore, we've got a house. Let's take some equity out of the house.
All right, Jay. So you're my age now, probably. So you're starting over again, yeah, fresh. You're renting right now for your brethren's yard, and you got your money back from your old house that you just left with your partner. What would you do?
I would personally be able to look and think to myself this: do I ever want to be in a situation again whereby I don't have resources? Do you understand? And I'll be looking to myself, more importantly, to see what can I do to make my money work for me. I'll be thinking to myself right now, buying a house. You guys don't know anybody who bought one house and they became rich. Like you personally don't know them. Maybe great-great-grandfather bought a house and now that house is worth dough and he was able to sell it when he was 100, or he died and his kids sold it. But no one don't buy one house and become rich. I've never watched a video on YouTube of one guy who bought a house and now he's rich because the house went up in so much value. It doesn't work like that. Yeah. So I'd be thinking to myself, I've just got some money that's coming. Boom. How can I make that money grow? How can I make that money work for me? What investments can I make to make that money grow? So I would take that money like this, and I'd see that money like a pie. Yeah. How can I cut up this pie into different sections that's going to work for me? Because I don't want to put all my eggs in one basket. I want to take all of this pie and put it in a house. Who gives a damn? Let me tell you something. After you close your door, no one ain't coming to visit you anyway. No one cares about your house. You care about your house, but I'm telling you, nobody really cares about your yacht. I got a decent house. I got a nice house. I'm not. My house is. My doors ain't open like to the public. Like, you know, come and have a look at my house. No one cares. So it killing you doesn't make any sense. Really, what? So, but I'm not trying to say don't invest in property. I'm just saying to you, make it be a portion of your pie. So maybe you're going to turn and say, look, I'll tell you what I'm going to do is I really want to buy an investment property. Yeah. Or maybe I want to start up a business. Maybe I want to do service accommodation. Maybe I want to buy, rent, refurbish, and keep that moving. Maybe I want to turn around and say I want to put some money into a business, but you have to try and make that £1 make £2. Because then you can grow your money. You're not going to do that and buying your own house for you to live in. You're going to do that from buying investment properties, by putting some money into an investment vehicle like the S&P 500. Now, that's not going to give you great returns. That's not going to make you rich. It's going to give you better returns than it's sitting in the bank. Yeah?
Yeah.
You're going to turn around and you're going to say, okay, there's a business opportunity. I think it's a good business. The guy's brought me in, he's spoken about it. And out of my 100K, for argument's sake, just to get a nice round number, out of my 100K, you know, with a 10K investment, just 10%, I can be an equal partner in this business. And this business is supposed to be making me 5K a month. Even if I split that with my business partner, that's 2.5K a month. I get back my 10K in 4 months. After that 4 months, everything's prof. So I've got some business interests because I invested in, and this doesn't have to be like businesses that are going to change the world. This could be I invested in a laundrette. I'm an equal partner in a laundrette. My man needed 20K to get his business started. And now don't get twisted. I'm not trying to say that laundrette's going to be, you know, because a lot of businesses fail. I'm just saying to you, you've got this pie of money. And I think that personally, it depends what you want. Another thing I should say is this: it actually depends where you are and what you want. Do you have kids? Do you just want stability? Are you not in a position where you want to take any risk, investing 10K into a thing? That's different. If you just want stability, to say, bro, I just got this house here that nobody can kick me out of, and I don't care that I'm going to be paying this mortgage all day long, then go for it. Do that. There's no right or no wrong. You can live your life in your own way. But personally, it's like this. I believe that, you know, a lot of us got bad information when we was younger, or didn't understand this game of how to grow our wealth. And a lot of us took our money, bought cars, bought houses early that maybe we or find ourselves in a situation with a partner. Like I believe that might be your story. And then in the end, you know, it got all sticky and blah, 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 blah. Like now you've got a second chance. You've got to be thinking to yourself, I don't want it to ever be that again. How am I going to make this money work for me?
Exactly, bro. Exactly.
Do you understand what I'm saying? So like I said to you, there's investment opportunities that you say, you know what, I want to buy a property, I want to do it up, and I want to sell it and make a profit. You understand what I'm saying? That means you've got 100K to play with, yeah? But you're going to turn and say, look, I've got 50K, you know, I want to be able to go and find a property that I can put 50K into, okay? I'm going to find 100K property. I'm just using an example that I'm going to have to put, you could try and buy on a residential, yeah, and then get a buy-to-let status on it, okay? Turning it from a resi to a buy-to-let. Not supposed to, but when you buy a resi, you can get you have to put less of a deposit. Maybe you can put 15%. On a buy-to-let, I believe, unless they've changed things, because when I say that, they're always change. There's always new products. So I can't just say definitively, but normally when you're doing buy-to-let investments, it's a 25% deposit that's needed. So out of your 100K, you're going to need 25. You're down to 75. Okay. Now, maybe you find a property that only needs 15K worth of work, 10K worth of work. So now you're down to 65 that you just bought that property. And now you could potentially sell this 100K property for 140, allowing you to clear your loan commitments and make a profit, and then go again, and then go again, and go again. It's all about looking at this money here, this pie, and being able to section it off for risk management of worst case scenario. Am I still going to be able to live to fight another day? And in my opinion, this is my personal opinion, to play attack with the money. If you've got the energy to, yeah, you're not at the age where you just want to chill out and be easy, which is fine. Like, my mom wants to chill. If I want to tell my mom, I want you to go and do this and start a business and run around, my mom's like, she's easy. I don't want to do that. Yeah, but if you're in that position where you want to make your thing work for you, then you have to play attack with your money. You have to look at it and go, okay, I've got this money right now. It's sitting in the bank and the bank's giving me this interest on it. Meaning that in a year, I'm going to be making my 100K is going to be, let's imagine that the bank is giving you, do you know what interest rate you're getting on your money sitting in the bank right now?
So the Chase, it's about 4%.
4%. So listen, say
Yeah.
that 100K is going to sit in the bank for the whole year and you're going to make 4 grand on it. All right. So you got to think to yourself, is it possible that I could take out 10%, 10K out of this, or even 20K out of this 100K? And could I make more than the 4%? Could I make a 20% return on 20K over the duration of a whole year? Well, to be perfectly honest, guys, you could probably do that in the markets. If you understand what we've been learning every single morning, that you want to make 20% in 12 months, yeah? Which means 20 divided by 12 means 1.6% a month by trading the financial markets with just 20K out of your 100K. You're going to do what Chase is giving you for your money. That's the reality. Though that might not sound attractive, you making 1.6% a month. Well, that's what Chase is doing on your money. Yeah. Let's imagine, for argument's sake, you are absolutely breathtaking trader and you're able to do 3.2% a month. Bearing in mind the challenge the prop firms are asking you to do is 10% and then 5%. Just put that into perspective. But let's imagine you can do 3.2%. You're doing 8% on that money. You're doing twice what Chase is doing with your money with only 20% of it. Only a fraction, only 20% of it. But then you got to ask yourself, is 8K a year what you want to do with that money? But probably not. Probably you want better investments. Yeah, probably you want to spread that around. So you're trading, you're doing 5% a month for argument's sake. Okay. So if you're trading, you're doing 5% a month on that money, which is not impossible. Okay. Well, then what's that? That is 60% you're doing on this dough. That means at the end of 1 year, you've made 160K out of your 100K. I'm not trying to say throw your whole 100K in there. I'm just saying you have to create this pie and see write it down. What are the options available to you? Okay, I can trade. I'm not going to put trading down. I'm going to make 50% in 1 year, but I'm willing to take up 10 grand out of my 100 grand and I want to make X% on it a month. When I get that near to that, and that means you can work backwards and work out your risk for every single trade. Your risk on that money might be some tiny little risk, bro, because you don't want to lose your 10K because you're only trying to make 2% a month. Because you've come to the conclusion 2% a month is 24% a year. And after 24% a year, after a couple of years of that compounding, that trading money is going to look good. And then you're going to look at this little box here and say, okay, I also want to get into this property thing, but I hear what Jay's saying, and maybe it's better for me to turn and maybe maybe I want to rent a slightly better place because I don't want to be with my brethren. Okay, cool. But at least when I rent that certain place, I didn't have to put out the 60K for the deposit. So therefore, with that 60K I've got left over, can I somehow get into the property market, somehow go and get something that I want to rent, maybe partner with somebody so you can provide the seed money. So you might say, I'm going to partner with Jay. Jay, listen, can you find a deal for man that we can buy that's cheap, that needs some work that we can do and turn a profit? Okay, yeah, there is this property here. Boom. You're going to have to buy it, which is going to mean the property is a 300K property. You can put down 15%, which is 45K. Yeah. And buy that property so we own it. Even though you don't have to do it this way, I'm just telling you the traditional way. And that property needs 10K worth of work. That's 55K you spend. You got change off your 60K. And now we're going to put this property on the market and it was worth 300K and we're now able to sell that for 420. Because we bought it cheap. We bought it below the market value. That means there's 120K profit in there. You just made 100% on this square because you got to split that with me because Jay's not doing this work for free. Yeah. So you took 60K, I took 60K. Fantastic. We're all happy. Yeah, you just made 100% on that 60K. You doubled that 60K. So I'm just saying to you, I would be playing attack. I'd be thinking about my money. How can I play attack on my money? Yeah, the problem is sometimes people ain't got no money to play attack on. But when that money comes in, how can you play attack on it? Because if you play a defense on it, look at defense. Defense is every month. This is definitely going at that money. Not to mention other expenses, not to mention this, not to mention you treated yourself for holiday, not to mention blah, 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 blah. That money's only going in one direction when you're playing defense. You're better off playing attack and losing 9 times and winning on the 10th time, just like our trading. You're better off doing that if you want to grow that money. If you don't want to grow that money, I don't know how much it is, and you just want to protect it. Say, for example, you just came into £1 million. Or maybe I was saying to you, bro, you've got 2 kids, you want stability, but you can go buy the house and just chill out, bro. And maybe have a couple of it. If that's what you want to do. But it's if you went and sat down with a financial advisor, they would ask you. They should if they're decent. They should sit down and say, what is it you want to do? Like, what's your goals? Because we have medium risk, low risk, high risk investments. What do you want to do? That's what ideally they should do. But I'd say this, most of us, including myself, and I'm not 20 no more. Yeah, I'm older than that. But I'm still in the prime of my life trying to play attack. Do you understand? Trying to win big, get rich or die trying. That's where I'm at. So therefore, I'm always trying to play attack. Yeah. Until you see me get fat, shave my head bald, and wear silk shirts, and I'm in Miami wearing sandals, you're gonna know that Jay's made it. He hit the belly. Yeah, you're gonna say Jay's like, that's me. I'm just walking around in sandals in a Versace shirt in Miami. Yeah, open. Yeah, with hairy chest. Then you're gonna say, well, Jay's easy. But until then, I'm playing attack. So if you've got that money in that war chest, bro, you need to sit down and make a plan. And you need to look at it not as high risk things. You need to have a balanced portfolio of things that you're into. Okay, I'm going to put some money into this high yield bank. Give me 4% a year. Okay. I'm going to also take a proportion of that, a proportion of the money, and I'm going to put it into the market. So I'm going to buy, £20,000 worth of S&P 500. That's going to supposedly give me a return of 12% a year or 8%. Okay, cool. Still very low risk, still a small portion of your money. I'm also going to be looking into this business side there that if it goes well, who can measure how much it's going to do? You get what I'm saying? But I want to manage my time also. So maybe that's a partnership I want to establish. Maybe I want to put it into education, because you putting your money into education to give you the tools is priceless. Because without that education, you don't know how to code, or you don't know how to do property, or you don't know how to trade the markets. So that is also a priceless investment. Yeah. So that's what I'm saying. You sit down and think. There is going to be no silver bullet. Have a balanced portfolio. Decide, like, write a list of things. Decide, yeah, these top 3-4 things is what I want to do, because 3 of those things are hands off and 1 of them are hands on, and I'm still gonna have a little bit of money on the side for a rainy day. Do I need to move out my place right now? If you do, because this is uncomfortable, by all means, maybe switch up. Does that mean that you need to go and drop 100 grand straight away in a deposit? No, you can say, no, I'm going to rent. My plan is for the next 2 years, I'm actually going to rent somewhere else, and within those 2 years, I'm going to see what I can do to make this money grow. Do you understand what I'm saying?
Yeah, that's why I came to you guys, innit? Because I wanted a little brainstorming session. Because I got a little son as well, innit? He wants to come stay with me every now and then, innit? Living in a 1-bedroom, not 1-bedroom, but renting out a 1-bedroom.
I understand. Yeah,
He's got to have a place to stay as well.
Yeah, but there you go. Maybe you turn around and say, you know what, Jay, I hear you, I feel what you're saying, but I need my own space right now. So maybe you're going to go and rent somewhere else. Maybe it's going to be in a cheaper area. Maybe now you're working from home, you don't need to be in your location. Yeah, and you're going to go and say, you know, I can go and get a nice 2-bedroom flat somewhere, and proportionally, it's only an extra £500 than what I'm currently paying, or an extra grand, or whatever, maybe than what I'm currently paying. So I'm going to do that. That's not long term, that's short term. But at least now I can see my son for the next couple of years and have that peace of mind to be able to play attack on my money. Then I'm going to look at my work situation. Do I still want to be working here and doing these things? Does that allow me to achieve my goals? Can I take a little hiatus from work to pursue other things? Maybe, maybe not. Okay. But I'm just saying to you, like, don't get quelled and forced into this thing whereby you should take every single penny that you've ever made in your life and go and buy a house. That only benefits the banks.
Yeah.
Do you get what I'm saying? Maybe when you're doing the whole, I just met my dream, my love of my life, and we just got married and we're holding hands, and the next thing we have to do is buy a house and then that's that like fairy tale thing that is painted just for you, bro. It's made just for you to take your dough and to put you in the trap. Because the other cultures, they're not doing that. They're arranging the marriage. They're doing the madness. Furthermore, dad and mummy are putting up the money for the marriage. Then they're all coming and living in the family yard, bro. Like everybody, mumsy, grandma, everyone's in the yard with it. Like, what happened to them going out and running out and buying a yard and doing this and having? That's like, it's only painted for the poor. That scenario. It's created for the poor. Yeah.
Sorry, I've got a question. It's probably relevant to everybody. I mean, I was asked the question on Sunday, but I was in the office till late on Monday, so I couldn't call you. Got a question in regards to property now. Someone's basically asked me a question. Their friend of a friend is been asked to invest in a property in Liverpool, like a new build.
Yeah.
But so what checks can one do before they invest in a new build? Yeah, I think, track record is one of them, but what other checks to see if it's really, says what it is on the paper?
All right. Well, great question. And this is moving on to the second course that I'm in the middle of putting together, which is about property and how to get into property. The first thing you want to do with any type of property opportunities, you have to do something we call due diligence. Okay. So your due diligence is basically trying to quantify the value of a property. All right. I'm going to stop the live because I don't want to be giving away the bags for free. Let's just do something.